My name is Randy Weins. I'm the president and designated broker for Weins World Real Estate out of Red Deer, Alberta, Canada. Welcome to Table Talk. Today we're going to talk about mortgages, and I'm very pleased to have two of the best in the industry to help explain what most home buyers, and in some cases home sellers, should know when it comes to dealing with the residential properties. So with me from the Get Her Done Girls, I would welcome Alyson and Lesley. And we're going to go through 5 or 10 minutes or so just talking generally about mortgages and what you need to know. Now, most of the buyers today require a mortgage when they're buying a home, and there are a couple of other things that you would want to understand as well. When you're selling a home, mortgage payouts maybe, and also shopping around for rates and terms. Also, when your mortgage is up for renewal, do you automatically renew or should you be looking around a bit? So ladies, welcome to this segment.
Thank you.
Alyson, if I can start off with you, why should people use a mortgage brokerage?
Well, first of all, thanks for having us here today, Randy. We really appreciate it. I think the reason people should use a mortgage brokerage rather than simply just walking into your bank is that the options are enormous when you go to a mortgage broker. You as an individual may not know what your situation is financially, but a mortgage broker will be able to take your situation and make sense of it and place it with a lender where it's appropriate. When you go to your own financial institution, they have one option. When you come to us, we have many options because we don't always know the challenges that a buyer or a seller, because they have to get a mortgage as well, we don't always know the challenges that they're going to be facing. And I guess the other very large factor is our brokerage always offers the best rate. There's no begging, there's no having to get another product to get a better rate. You always get the lowest possible rate available when we do your mortgage. So I think that's really important because you can trust that we have your best interest in mind at all times.
So if I'm looking to buy a home and I want to get a mortgage, you will actually do the shopping for me.
I do.
You'll check out a number of institutions around and find out who at that particular time is offering the best rate in terms, and I can sit at home and wait for the phone to ring or the email to come through. That's kind of the way it goes.
Well, yeah, and what I like to say is basically we do all the shopping, we do all the heavy lifting, we negotiate everything for you, and you pay us nothing.
Well, that's important because I was going to ask how much this cost me. So I see. So how do you get paid?
The bank pays us.
I see.
So whatever institution we place a mortgage with, they pay us because we don't have any overhead, so they pay us instead of paying somebody else.
Gotcha. And you would then explain the best deal in terms of why it's the best deal to
Absolutely.
me, so I would understand that.
Absolutely, you
Okay.
bet. And
Right.
and we like to understand a client's needs. Everyone has specific needs, so that will mean a specific mortgage. And then we sit down and say, this is why we believe you should have this mortgage, and we walk them through it, and we keep in touch, and we make sure that we develop a relationship over time.
All right. So when you found the best deal for me out there, then I don't even need to go to that financial institution or the lender who is offering that best deal. You will handle it right from. All right.
We do the whole thing.
Do I need to book appointments and come down to your office to do all of this?
Not necessarily.
Oh.
No, we can do things over the phone, we can do things over the web, we can come see you, you can come see us, however is best for you.
All right. Well, that sounds like a great deal. Lesley, Alyson kind of touched on shopping around for mortgages and some things that may be required. What do lenders typically look for? Like if I want to apply for a mortgage to buy a home, what type of information do I have to provide, and what do lenders use when they're going to make a decision?
There's 3 key areas that lenders are looking for. Number 1 is credit. Your credit's going to determine what type of rate we're going to get for you. The other one is employment or income. And the last one is down payment. So the types of things for credit, that's something that we get that score. However, people can find their score themselves. Everybody's entitled to a free copy of their credit report once a year. It can be done simply by going to equifax.ca. You can do it online, or there's a phone number, 1-800 toll-free number that people can call and get a copy mailed to them. In terms of employment and income, The typical things that we're going to be looking for, or any lender will look for, is a letter of employment confirming their date of hire, their position, rate of pay, a recent pay stub, and then we'll also, depending on how long a person's been working there, we would ask for typically T4s, notice of assessments, and if a person's self-employed, it becomes a little more detailed for the type of paperwork that we're going to be looking for. We'd look for T1 generals, statements of business activities, that type of thing. Then when it comes to down payment, we are looking for 3 months recent bank statements, investment statements. If it's coming from the sale of property, of course we need the purchase agreement, the legal documents that would go with that. Maybe somebody sold a car, we'd need a bill of sale, confirmation of those funds going into their bank account. That's just some examples of how we would typically find a down payment. We also have lenders, a few lenders that still offer alternative solutions for a down payment. So you can do a borrowed down payment. So we have 2 different ones. We can do a cash back or a flex down. So we have all kinds of options.
Wow, I didn't know there were so many different things involved, or things that you could do when you're getting a mortgage. I usually thought that, well, I'd like to buy a house. I go to my local lender and say, I want to buy a house, here's how much money I need, and they say yes or no. The economy over the last couple of years has really turned, especially in North America, the United States and Canada. Job losses have been a real problem in some areas. So let's assume that I lost my job for a while, but I've gone out and found another one. Is there a length of time I have to be reasonably stably employed before I could even think about getting a mortgage?
If you are working in the same industry, we go in with full disclosure, and sometimes there's a probationary period. Some employers are willing to say, you know what, we think you're a really valuable employee, we're going to waive that probationary period. So we need to know all those angles, what a person's situation is. So if you are brand new into your employment, never done it before, some lenders might say, you know what, no, we want to wait till they're done that 3-month probationary period. But that's something that we do. We work and counsel with the people that we work with and figure out what their situation is, and then we help them shape their plan.
Okay, gotcha. So what would a good credit score number be?
A good credit score, 720 is a score that you pretty much have limitless options in terms of credit. Typically we're looking for something 620, 650. There's many different requirements for the different types of products that a person is applying for, and that's what we do. That's part of the heavy lifting, the designing of the mortgage, however you want to call it.
Okay.
That's what we figured out.
All right. Alyson, back to you if I can. Home ownership versus renting. You want to talk about that for a bit?
Sure. Now that's a really great question, especially today, because typically in the past, I mean, it was always home ownership. It's always been buy a home, buy a home, buy a home. With home values rising, you know, sometimes it's not affordable to buy a home, or people find it more attractive to rent. They have more flexibility to rent. However, I still think home ownership is more attractive because I think we're at a bottom. I think at this point we are at the bottom of the market, and you won't know the bottom until you start to rise. So don't quote me on this necessarily, but we will know this was the bottom as soon as we start to rise. This bottom could be a very long trough. We could be at the bottom for a bit. But here's the thing with being at the bottom today that differs from any other time. Rates are at a bottom. So we've got the bottom on pricing, and we got the bottom on rates. So I like to think that if you can buy, you would buy. Because really you're getting very, very low interest rates. You are getting, like, historically, the lowest interest rates. You're getting the lowest in value in homes, right? And we still know, you know, year over year, decade over decade, real estate is a solid investment over time.
Yeah, I've always thought so as well.
Yeah.
All right, so we talked about a little bit about bottoms of markets and peaks of markets and things like that. How would I, if I'm buying a home, know if I'm getting fair market value? If I'm doing the right thing today and paying the right price for a property, do we have any way of knowing that?
Well, fair market value is is also a very interesting question. How do you know? In a way, you don't know. I mean, value is based on the fact that when you want a home, it's worth that amount of money. If you're going to go look at a home and write an offer and it's listed for a certain amount of money, it's worth that. But let's say you want to buy a home and it's listed for $300,000 and you think it's worth less. But the seller's not going to budge. They want the 300. We have actually a program. If you are dealing with a realtor that's signed up with the buyer protection program, basically the program can protect you against any decline in the market. So basically, you can write an offer at 300 as a buyer, and then we take a look back over 12 months and we put a percentage of money into a trust account, okay, that you negotiate in the offer to purchase. And basically after 12 months we look back and see, did the market fall or did the market go up? Now I'm explaining this in very simple terms at this point. There's a lot more to this program, but basically this program says to the buyer, if the market goes down, you will get a certain percentage of money, whatever you negotiate into that deal. So we're kind of giving you a program now that says, go ahead and write while rates are low, because I can't guarantee rates will be low next year. Write today while rates are low, but you have to be with a realtor that offers buyer protection program.
Wow. Well, that is certainly a leading edge, because quite frankly, I had never heard of that before. So this is brand new, right off of the press?
Right off the press.
How about that?
Absolutely.
Well, that's great. Listen, we're out of time for this particular video. Alyson, Lesley, thank you very, very much. We sure want to talk more about this buyer protection program that you've come up with. It sounds like an awesome, awesome product. And I'm sure many people out there, buyers and sellers, will be very interested in finding out what it has to offer. And it sounds to me like that really helps us clear up some of the anticipations or lack thereof when we're saying, well, is the market going to go up, down, or sideways, and what are rates going to do? It sounds like you've come up with an answer.
We have.
So Alyson, Lesley, thank you very much for joining us this morning.
You're welcome.
To our viewers out there, you've heard it right here from two of the best in the industry, the Get Her Done girls. Thanks for tuning in. Bye for now.